You start out on your release. Our team executed well in the fourth quarter, delivered results that were in line. Then your CFO, whom I like very much, immediately starts talking about fourth quarter organic sales declined 2.6, volumes were down 340 basis points, different weakness in almost every market, U.S. organic growth of -3. How is that executing well?
When we look at Q4, our businesses, they delivered results that were in line with our expectations and our guidance. And we've been facing some challenging key end markets, notably automotive, electronics, and China. We delivered strong performance in the face of those challenges. Delivered growth that was in the range. We had EPS that was at the high end of our guidance and strong, solid margins, I would say, and a record for the year, $5.4 billion in cash flow. So a solid end to a challenging year, but really strong performance by our teams.
Well, I saw the guidance of 9 and change, which was not that much off the of what people were looking for. But this is 3M. And I'm not used to 3M being down 8 points, frankly, because it's a trusted, great American company. And I'm wondering whether your goals aren't too low.
Well, as we come into 2020, we see a return to growth. And it's the 3M model that you know. It's the strength of our innovation. It's the market-facing go-to-market models that we are successful with. So we come into 2020, return to growth on the top line. With the work we've been doing, well-positioned coming into the year to deliver leverage to EPS and another year of strong cash flow.
Well, then perhaps the decline is something that David and I have talked about. Maybe it's related to litigation.
Yeah, I want to talk a lot about PFAS as well, Mike. But first, let's also talk about what you're calling a transformational journey and the acceleration of that, which is actually also a result going to be 1,500 job cuts. Why is that something you need to do? And explain to us and to shareholders why it's something that's going to help this journey.
Yeah, well, we talked about today the next phase of our business transformation journey. We announced our new global operating model. This is another thing that positions us well as we come into 2020. It enables us to take advantage of all the work we've done, deploying a new ERP, all the capabilities around it, the end-to-end capabilities to really serve our customers. It aligns us better with customers, deliver on our innovation, and streamlines and simplifies the organization and the company to really focus on growth and operational effectiveness.
How do you get to 1,500 as opposed to more or less? How is that determined to be the optimal number of cuts that come along with this streamlining?
And this has been something we've been working on for the last year. In April, we announced a move from 5 to 4 business units, aligning around customers and our go-to-market model. Then we set about really putting this in place. And so that work has led to where we are now. And this alignment, that realignment that we're doing, this restructuring, is to move quickly to the new model. It's been part of our plans, and we're ready to launch. We're excited about it. Our employees are excited about it. They're energized to move forward with the change.
Okay, so we've got weakness in China, weakness in auto, weakness in electronics. What are the green shoots there that give you the optimism that, frankly, I don't see?
Yep. So the return to growth in 2020, it's based on a view of the macroeconomic, industrial production low but growing through the year globally, GDP continuing to grow low but steady. And then the markets that we've talked about, they stabilize a bit. And up until the last couple of weeks, we were looking at China as low to mid-single digits growth for the year. Maybe starting off slower with automotive, negative build rates in the first quarter, but getting better as the year progresses. Now, what's going on with the situation with coronavirus, that puts us in a little more wait and see. Let's see how the quarter develops. But it's certainly part of those markets getting more stable as part of it. We do see some positive outlook in electronics around semiconductor manufacturing
5G.
And
5G.
Data centers and 5G.
Right.
So there's some positive there. Automotive, a little better year over year. We don't have some of the channel impacts that we saw in 2019. So a little more stable, but negative build rates again in automotive in 2020.
Let's drill down on the litigation. I don't want to freak out. A grand jury subpoena from a U.S. attorney is nothing that is shocking, given the fact that you're in litigation. At the same time, there are people who are ill at ease when they see that and question your level of cooperation.
Well, we are leading in PFAS from our values around sustainability, environmental stewardship, product stewardship. And really, these are core values to 3M, to our people, to me personally. And we've got a strong team now proactively managing it. And they're guided by the principles of sound science. They're guided by the principle of very good transparency.
But this is clean water in the ground. This is water in the ground. That is the holy grail of pollution in this country.
Yep. And we talked about two commitments today that we stepped forward in. One is continuing to resolve the issues that we face where we manufactured and disposed of PFAS. And part of our reserve was related to that. And then we also stepped forward on a commitment that we're going to work with customers to be part of the solution where they have PFAS issues as well. And that was also part of our reserve.
I wonder what that means. I mean, I guess you're referring, you've made it clear that you'll take responsibility to clean up your manufacturing sites. Right. But other shareholders have the question, Mike, as to if you've made approximately half of all PFAS chemicals that are out there, which some believe is the case, will you take responsibility to clean up all the places that PFAS has spread? And where levels are elevated. I guess that's a key concern in terms of a potential liability for the companies. So what's the answer?
And so the commitments we've made is to work with regulatory agencies and really to be part of the deepening the understanding about PFAS, to really determine what we need to do and to work with customers to address the issues they face and, like I said, continue to resolve where we manufacture and dispose of. So that's a pretty proactive plan that our team is driving forward.
Is the new charge, what was it? It's $214 million, about 29 cents a share. Is it related now more to litigation as opposed to the first quarter charge of 2019 that was related to remediation?
It's split roughly evenly between the two areas that I talked about: the manufacturing disposal, continuing to work that, and then also helping our customers address the PFAS issues that they face, and really related to multiple cases.
But are you able to then estimate what the litigation liabilities are going to be?
One of the things that we know is important is getting more certainty, especially in our broad stakeholders. They want to understand this better. And so this is another step forward. We're able to identify more what's probable and estimable, and so we can take a reserve, and we'll continue to move forward. And as it develops, we've committed with that, providing transparency to share that.
You're trying the best you can to understand it, but at the same time, it would seem to me to be difficult to come up with a number overall. I mean, you're taking it as it comes, right?
Well, we continue to proactively manage it, and it is going to be, something that we'll have to update as we go.
Like there's a epidemic. Some people fear it could be a pandemic. How many plants do you have making masks, and are they making them 24/7?
With the coronavirus away, things are moving forward. Our focus is ramping up our production as quickly as possible to meet the demand. And we're working with customers and government agencies, health organizations in China and outside of China to really meet their demands. And in that process, we are ramping up demand in all of our sites, all of our production sites around the world. And we have production in China, we have production in Asia, in Europe, in the U.S. And so that's the focus from us. Our personal safety team is very experienced with this, right, and they are responding well and working, I think, very effectively with everybody who has the biggest needs.
Do you have any idea what the ultimate demand would be, or what you need to ramp production up to?
Well, we are ramping to full production. We're going 24/7, and we're supplying into the market where government officials and
China,
customers
there's clearly potentially going to be a shortage. Are you having trouble getting your workers in China to the factories? Has that become an issue at all for you?
We continue to operate that plant, full production, and we're ramping that up. It wasn't quite at full production when we started the year. Now it's ramped up, and I would say we also our employees in China are really part of the solution, donating respiratory protection as a company, donating respiratory solutions into the market as well.
At the same time, even though you're donating, I mean, this has been at time a spike of, say, as much as $700 million for 3M. Could it be a $1 billion spike?
Well, respiratory protection is an important part of our larger personal safety business, and meeting that demand will certainly be stronger growth than we saw in the plans as we started the year. But it's just part of that overall safety business.
And Mike, finally, to come back to the quarter and guidance itself, I think last year you revised guidance a number of times, and so I'm curious, what do you think are the key variables in terms of this year's guidance to avoid that recurrence, obviously, that investors don't like when you have to revise guidance?
Yeah, and the challenges we faced in 2019 were really those key end markets and the slowdown that we saw. We took action and addressed those challenges. And so as we came through the year, focused on controlling what we can control and delivering strong margins, strong cash flow, taking our inventory down, positions us well as we come into 2020 with the outlook for the macro and for those markets as well. So I think we're better positioned as we look at those markets coming into 2020. The return to growth will help as well. We were facing a difficult slowdown in 2019. We're looking at a return to growth in 2020.